I'm a trained accountant, and like they are not going to exist in the future. So those traditional routes that you were going to come out. So a little bit of budgeting tips with a dog. I mean, it's just not going to answer your fundamental questions that you as a generation have got.
That's right.
From 11FS, I'm Sam Maule, and this is Fintech Insider News. This week, we bring you Acquisition Heaven 2019, the year of acquisitions. Chime ringing in the new year in style. Silicon Valley's reality check with California's new consumer privacy laws. And Barclays harness puppy power to ease students' money stress. All this and much more on today's show. All right, folks, real quick. I have to note this. 11FS is taking part in the 2020 British Bank Awards. We need your help to win. I'm not going to brag, but I'm going to brag. Last year, we took home the 2019 Consultancy of the Year, and we love to get it again 2 years running. We are highly competitive, and that's just how we roll. Not just that, we're also taking part in a new award category called Pioneer of the Year. So if you love the work that we do, head over to the following link, and I'm going to speak really slowly so you can get a pen and write this down. bit.ly/11FS 2020 and nominate 11FS for the Consultancy and Pioneer Awards. It would mean the world to us. Okay, with that, let's get on with the show today. Welcome to episode 377 of Fintech Insider. That is bonkers. Today, I'm joined by my colleague and co-host, Will White. Will, with the tremendous New York beard. How are you today, Will?
I'm very good. A little hungover after dark. But
we drank sake last night. Right. So for anybody that's watching the video, Will's the one with his head on the table. And the fabulous beard. As always, we're not alone. We're joined by some awesome guests today making their Fintech Insider News debut. We have Phillip Rosen, the CEO of Even Financial. Phillip, how are you?
Very good, thanks. Thanks for having me.
You also have a tremendous beard.
Not as well taken care of as his.
No, it's not, thanks, but you look good in a very Williamsburg type of way. We've already established that.
That's where I'm from.
We also have one of my personal favorite people in New York, Ramona Ortega, the founder and CEO of My Money, My Future. Ramona, how are you?
I'm good. So excited to be here.
And we're thrilled to have you. Were in Austin?
I was in Austin yesterday. I ran here. Was at a Village Capital meeting earlier. So happy to be here.
Ramona's always running somewhere. And last but not least, we have Charley Ma, New York's growth manager at Plaid. Charley, how are you doing?
Good. How are you?
I'm really good. I think you've had like 8 meetings already with Will, at least in the past 2 days.
Yes.
So there we go. All right, everybody, welcome to the show. Let's get started. We have a lot of news to cover. The first story is actually breaking. So in the news today, I think I read this like 2 hours ago, Charles Schwab is acquiring TD Ameritrade for, I think it's $28 billion. A couple days ago, we read about PayPal made their largest acquisition to date of $4 billion for Honey. Mm-hmm. How y'all doing? You selling your companies? How we doing, everybody?
Phil.
I want to start with the Honey one. There's a lot of money. It's $4 billion for how much are they doing? Roughly about $100 million, I think.
About a 40x on revenue, I think, is about right. Which
seemed high.
Seems high. Feels punchy.
Yeah. Seems high.
They have 100% growth year on year. But like that feels, I don't know. It feels like a strange valuation.
For listeners that don't know, what is Honey? Anybody want to take a stab at that? What does Honey do?
I only learned yesterday. You go for it, Sam.
Well, Honey is pretty interesting. I actually have it. It's an extension. You know, when I go out and I'm going to the point of purchase, this extension will come up and it will cycle through and give me different deals and show that and get me. And it's worked. Actually, I got to say, it's been pretty good of what I've seen it do and come up. But for PayPal to spend $4 billion personally. I think, Phil, you gave it.
Yeah, I mean, it seems...
That's on my desktop, too.
It makes sense to put that into the moment of payment. Like, I get that. A lot of people look at the cart as one of the most effective monetization moments. Certainly drives credit card acquisition better than almost anything else. So it seems really smart for a PayPal. Just seems like a lot of money.
Yeah, $4 billion is a ton. How about $28 billion for TD Ameritrade? What are we thinking on that one?
I don't know. It's big. I don't know. Yeah, I can't speak to the multiple or whatnot on the revenue side, but it creates the biggest, I think, brokerage by assets under management now, right? I think under something in the trillions of dollars
yeah.
and
Unbelievable.
kind of
Yeah.
going against
Yeah.
Vanguard now, which is
Right.
that
And is this
scale
because
is
of
massive.
free trading? Like, is this
Yes,
consolidation?
it's all
because of
the
that?
zero
Consolidation.
commission.
Yeah.
I think that's what I was talking about earlier. That's more interesting to me in terms of this consolidation, especially with the growth of robo advisors, and now your consolidation of the big wealth managers. Are they? What's going to happen, right? I mean, at the end of the day, you can just go straight now to a Vanguard or Fidelity.
But is aggregating more assets under management really a defense? Like, it seems like they should be going after functionality or community, right? Just putting more assets under management, maybe some efficiencies, but
Different
it's not going to change the
demographics.
value prop.
Yeah.
Isn't it just a classic M&A cost play?
Yeah.
You know, like,
Yeah, Ramona, I do like your point though, and I think we've seen this cycle throughout different verticals within fintech where the disruptors will come in and disrupt, and then you'll watch those that have been in play forever and a day go, yeah, we can do that too. We got a
Right.
crap ton of money, so we can step in and do this. So
Well,
you've got to
the
constantly be
back end,
looking
yeah.
at your business model,
Yeah.
right?
The back end is the same, right? I mean, even with the robo advisors, a lot of them are still using the more traditional ETFs from these big wealth managers.
Well, anyways, here's what I would say. At the end of the show, we're going to give everybody a chance to give us a way to reach out to you, best contact information. So if you are looking to pitch and sell and be acquired, great time to do that, all right?
Too soon.
All right, just going there.
Way
And
too
Plaid, you're way too expensive now. So, hey, 11FS. Sam Maul's really close to retirement, so let's make this work. Call me. All right. On to our stories that we had before. We heard that breaking news. The first one is around Chime. So the digital bank Chime will quadruple its revenue in 2019. A story that was in Forbes this past week. And here's what I found interesting. They listed Chime, and here's how they worded this. The leading branchless bank in the U.S. will earn $200 million in revenue, a fourfold increase over 2018. So now I'm going to take a moment to do an editorial comment. They are not the leading branchless bank in the U.S. I would say USA would look at them and go, seriously? They're also not a bank. They don't have a banking license. However, they have seen and are reporting tremendous growth. They've said they've attracted 3.3 million customers, each hold an estimated average of 1.5 accounts. So that comes up, they're saying, to 5 million accounts. They're also saying they're seeing a ton of growth around direct deposit. More than 1 million customers have signed up for that so far. And in a checking account, or in the UK called a current account, direct deposit is nirvana. You have to go there. And that Chime plans to expand into credit cards and investment services as it strives to become a full-service digital bank. Thoughts, folks?
Well, they're also spending $32 million just on TV ads.
Yeah.
So this is, we have seen a proliferation of online banks. I mean, Chime's been in the market for a minute. We've got Novo, you've got Simple, you've got N26 coming in, you've got Acorns opening banks. I mean, so there's also this sort of banking craze, zero fees. I want to know where the revenue is going to come from
and
eventually.
All they're doing is really pumping VC dollars into advertising spend and just driving up the cost of consumers with being not a real bank, but a front end to a bank. So it's a dubious value prop.
Yeah, I find it interesting. I like that you brought up the point around traditional advertising, right, with television and not this word of mouth growth. I've done and I know we all have done that, where you're the Shark Tank guy, right, at the pitches and everything, and you're like, and you're doing growth via, and they go word of mouth, and you're like, you just leave now. Go get, that's nice, that's cute, that's not real. The one thing I do find interesting, though, right, and I get Chime bragging about 3 million 3 million active customers. It's so funny because in the U.S. we just don't talk about it enough. You go down to Brazil with Nubank, 12 million
Crazy scale.
customers in that market, and I can't remember the name of it, but they're about to get competition. Sarah Kachansky, who does research for us, one of the big investment firms, has just invested something like $9.8 billion in the challenger in Brazil. So it's going to be fun to see. Yeah, I know. I can't.
Wow.
And if I was really good, I'd have that story up and running right now. But I don't want to eat up the data on my phone. But Sarah, good job. I'll find out exactly who that was, and we'll see how that goes. Are we buying the direct deposit going into these accounts?
I'm kind of interested in what Ramona said there. Sorry, I'm going to have to turn, not ruin the mic, but I think the interesting thing, full declaration, I was early doors at Monzo in the UK and then a competitor. And I would say about 4 years ago, when it first set out in the UK, the cost per acquisition was almost nothing because you would just get a community. It was kind of like doing something that the banks weren't. And on the user experience, user interface, the banks caught up. Other people caught up. There wasn't an obvious moat. So this was always going to happen. And now they're facing kind of bank level cost per acquisition. And then at that point, you've got to find the revenue somewhere. And it's very tempting to go down lending. I don't know enough about Chime's kind of credit risk. I don't know enough there. In terms of them getting the direct deposit, my biggest concern here is their outage with Galileo the other day. Because if you're aiming at the underserved market and you're dealing with the paycheck to paycheck group, and suddenly your payment processor goes out for a few hours and someone doesn't get to work, you don't get a paycheck. If that goes out on Twitter and goes viral, you've lost customers.
Yeah, but it was interesting. There wasn't a backlash.
There wasn't a backlash. That is a very fair point.
The consumers were really understanding of that.
I'm very traumatized because I dealt with, there was the equivalent of Galileo sort of servicing enough people as GPS in the UK. And they've done a great job since, but 2-3 years ago, they had a bunch of problems and the outages were incredibly damaging from a PR perspective. And interestingly, it didn't happen this time.
I think Chime has built an interesting brand amongst their consumers. Like there does seem to be a lot of trust with the end users that they have. Like I think I was expecting to see a much stronger visceral viral response just because it's completely down and there was some social media activity, but not a lot. I think that the responses from the team was really, really strong, but I did find that to be really, really interesting.
They handled it responsibly, and I think consumers at this point have a little bit of an understanding that this is a new thing and there's going to be issues. If the same thing had happened from Cap 1, I think there would have been outrage.
Yeah.
Right?
Yeah.
But I mean, obviously you saw it, but when Cap 1 cut off certain access points to their data, there was a real big backlash about that.
Yeah.
But that was a real bank, like a full-scale bank. Chime's not that.
And I also think it's a little bit of maturity too, right? I mean, this isn't 210. Like I remember Simple went down, right, at the time, and I think Simple handled it incredibly well, right? The way they reached out, they actually paid customers. If I remember right, something like 50. They put $50 into their accounts for it, and it was an excellent way to address this. And I think they had done Shamir and the team had done an excellent job of managing that. But the concept of this pure digital bank isn't new.
Well, that's exactly my point. And
Yeah.
full transparency, I'm an EIR with Oslo, which is owned by BBVA, and Simple is part of that family. This is not new. I mean, that's kind of what I'm always like surprised. Like, we have tons of digital banks now. And even when people start talking about the underbanked, I was like, people can get a bank account now for free with no fees, and it's pretty accessible for most people if you have Social Security card and et cetera. So I just like to see like what happens in 3 years. I mean, again, all of these other companies are adding bank accounts. Tons of fintechs are saying now that their bank, because they're using charters and it's sort of rent a bank.
Yeah.
But I mean, they're competing a lot on features, right? There's the overdraft protection element, which kind of drives a revenue stream for the banks to zero, just like commission
Access to my pay early.
Right.
So,
N26, I think, is doing that too.
So it's like they have the Robinhood or StockTwits early mover advantage on cost of trade, and then the banks will eventually do that, and everybody's going to start looking for new ways to make money. And if you don't hold the bank charter, that means you're probably stuck in partnership, right? Like, you know, because you can't do it all yourself.
Reality.
Right.
And you're not making money off of interchange. So it gets back to you're going to make money off of the other products, right? You're going to make money off of lending, getting into credit. That's where you see it. I think part of the reason, my own take on why the outrage wasn't massive, I seriously doubt many of these Chime was their primary account.
That's right.
Yeah,
They still had
absolutely
access
not.
to
That's
their
absolutely right. And I think we're going to see that more and more too. These are additional accounts.
You know, we have research internally that we've done that shows that millennials, you think they want everything digital and mobile, but when it comes to their checking account where they're actually putting their paycheck, they want a physical branch, right? They want the digital interface, but they like to know there's some place they can actually go. They haven't totally embraced pure, exclusively digital. And so, yeah, it's almost certainly not their only account.
Well, it'll be. I think the thing that will be interesting is to do a show, like you said. Let's go about 2 years out, and see if Chime hasn't been acquired by Lord knows who's sitting down and acquired them, and then what does it look like now? Have they actually branched into other offerings, right? And have they? The thing at the end of the day, it gets back to revenue, right? Are you making money? And that's what really matters. And
there's the other side, which is the cost side as well.
Yeah.
Yes.
Because on the whole, rent a bank, or David said Airbnb your bank license, right? Right. So it's a very smart model, obviously, specifically in the US because of the quantity of like community banks. But the hidden costs of running these things are insane because it doesn't matter if there's a middle layer between you and the bank or you're directly with the bank. When you're having to deal with the realities of compliance and customer operations, I don't think that there's an agreed point at this point of how much you do as the fintech or the neobank and how much is done by the underlying bank. And that is, they're very exposed on a meta level and on a
Why would they bought a bank? Right? They have enough cash.
Yeah, it gets
That's-
back
I mean,
to that,
It's
right?
like $50 million you can buy a bank. They should be able to afford that. Like, just buy the bank.
Yeah. I think
Play a regional banks.
Right, yeah, buy a very small regional bank.
Well, the regional banks are the ones that are supporting. I mean, they're using Sutton, right, and Bancor at the end of the day.
Are they
right?
Sutton?
Yeah,
Yeah,
Sutton
okay.
and Bancor. So I mean, what's funny, you're talking about those underlying costs. That's not just unique to the fintechs, though. So you can take the largest banks in the U.S. without naming them, but they're very large, and they might be top 5 that have rolled out pure digital play banks. And part of the reason they have folded up or run into issues is because the cost of servicing, even internally, their internal costs are ridiculous.
Well, Chase,
Tough to do.
But Chase also just completely blew it on marketing. I mean, I think they spent something like 20% of their IT budget to build their digital bank, only to shut it down after 6 months. And that was mostly going to agency and marketing and creative, not operations.
I'm looking at the camera and smiling really broadly at that comment because I agree 100%. And I think we could stay on this story all day.
Yeah, we can.
But I have to move on.
Because you just opened the Fin thing. And there's
Oh
a
my
whole
God.
thing
I
we
get
can talk
so
about.
excited.
The Fin thing is fascinating.
It's
Yeah.
fascinating because it's like
It
a
is.
different version. It's like, did they think about the compliance correctly? Did they think about the realities of digital?
Yep.
Or were they
Yep.
more interested in the digital design? And I'm not
Right.
like throwing. It's hard what they're doing.
We have one of the
to be
people
fair.
who participated in that whole process working for us.
Interesting.
And she really walked us through it. Sounds like it was actually more about design by committee.
Yeah.
Is what did it in at the end. They're like, we're
Welcome.
going to do a digital bank for millennials. And
Yeah.
now we ended up with something thoroughly mediocre that no one wants.
And shocking. All right, so I want to move on to a topic which is equally fascinating. kind of. HSBC in the U.S. is offering real-time payments, their network, to business clients. This is a story by Finextra. So HSBC is using the RTP network to offer just-in-time cash management, instant payroll delivery, and immediate funds to business clients, which actually isn't a bad move, right? SMEs and business clients. I kind of like, that area. These enterprise can send real-time payments as of Monday morning and have been able to receive them since July. HSBC has been working with the clearinghouse, and that's where RTP comes from, and other banks to modernize the U.S. payments industry through RTP, which I think was launched around 2015. The Fed has come in and said that they're finally going to have a real-time payments network called Fed Now, which is actually Fed later because it's not going to roll out to like 2023 or 24, which I still find to be flippin' hilarious.
And unlikely.
And thank you. And that was Phil, everyone. And I agree. Highly unlikely they'll get it done in that time because it will be designed by committee, and we'll see how that goes. Again, I think this is interesting, but I mean, you already got 50% of the U.S. banking system that operates using RTP by the clearinghouse. So is HSBC ahead of the game, or are they just playing catch up? I mean, why this move? I'm looking right at Will with your incredible
'cause
beard.
I read this. I was like, oh.
Isn't this kind of one of those stories where you're like, okay.
Yeah, that was literally my view. Was like, oh.
Yeah.
Although I will say this, in my experience with the bank and as a client, as a business banking client, all small businesses want their money sooner. That is the one thing that, even though we've done all this stuff
That's
in
a very good
fintech,
point.
getting people their money still takes a long time. I put in a check for $10,000. I had to wait like 9 days.
I mean, their entire lending model is built on that fact, right? Like, that's what factoring is, just move the money to them faster.
Yep.
Yeah.
Correct. And so
And float is really nice when you work at a bank. By
Right.
the way.
Right, exactly.
And then interest.
And people don't understand that. But I think that being able to get real time cash, that's why Venmo, people love Venmo. I can get my money right away. And I still think the time to cash is still a big issue for a lot of people.
And one of my favorite stories, a friend of mine over in the UK, she co-founded a company called Asmo, which is all around, think of TransferWise and everything like that. But she was waiting tables. She was from like Germany or Poland, if I remember it, Poland. And Marta was waiting tables, and she was trying to get money home to her mother. And she went to the bank to do it and was like, oh my God, no. What she'd have to pay in fees. She went to Western Union. She went to a couple examples. It was cheaper for her to buy a ticket on Ryanair, take the cash on her and fly and hand it to her mother. And because of that use case, she created a fintech company, right, with somebody. It's stories like that drive you nuts.
Yeah.
But flip that outside the consumer world. And like you said, put it on small business. Cash management and cash flow is your lifeblood. I mean, fintech companies, even worse, right? I mean, you've got to make payroll. You've got to have that money flowing. So I get HSBC playing this. I'm not knocking HSBC too much.
I don't think it's too late. I think it's still early days with RTP, right? I mean,
In the
especially
US,
now
yeah.
in the U.S. especially. Like I think the vast majority of businesses and consumers aren't even aware of what RTP really means, right? I think if you go and talk to a business and say, hey, you can send your payment via ACH, same day ACH, which isn't necessarily same day, or RTP via ACH or RTP via now Fed Wire, Fed Now. The vast majority of businesses, I think, won't understand what that exactly means, right? And so I think it's still early days, and I think there's a lot of interesting problems it's kind of trying to solve, and I think there's gonna be a lot of interesting companies around that. But the ecosystem around that just still hasn't been built out, right? We just got, I think, of 10 banks or so with ACH that are on board, and it's still kind of unclear which banks have it, which ones don't, and it's not super clear yet on the value prop exactly, I think, for the business and what they're giving up in exchange to get faster payments. So I think it's still early. Like, I don't think it's too late by any means.
Yeah. I mean, the name of this podcast is Fintech Insiders, right? Cool name, and I like that. But I think when you even think about the name of the podcast and all of us sitting around the table, the fact that we know when FedNow is supposed to roll out and the fact that we know who actually did, RTP, and we know what the clearinghouse is. The typical small business person has no clue what we're talking about at all.
Yeah.
They just need it to work.
Yeah.
Right.
And I'm not a payments expert, and so one of the things that I keep wondering about RTP is what it means for wires, right?
Yeah.
Because that's the other thing that's kind of replacing. And there are massive issues in wires, especially around fraud, like billions and billions and billions and billions of dollars. And I'm wondering, is RTP actually kind of the thing that'll finally maybe fix that? I really don't know, but
having come from a market where fast payments exist, it just creates new criminals.
it creates new criminals.
But as in anything
New
technology
fraud
does.
Sadly so. I mean, it does just produce new criminals.
Yeah.
So
It's the world we live in, though, right? I mean,
because they just find easier ways to get the money faster, and actually they can spin it around the system faster, so they can layer the
I think
fraud
like you
along.
need stronger customer authentication. If it's going to be easier to send payments, they're going to clear faster, and your clawback window decreases. Like, it just points to, okay, there's going to be a lot more tooling, a lot more education that's going to have to be done for these merchants if you're going to accept RTP. Like, you got to be increasingly sophisticated about those fraud vectors.
Yeah, and I think to sort of I think there's always a thing on this that, the UK has done a wonderful job with fast payments. Just to be clear, the government in the UK 3 weeks ago said they're now going to put a 1-day delay on fast payments, which everyone, by the way, went, that's ridiculous. Like, you don't solve the future by going backwards.
There was great actual Twitter comments on this, like, hey, there's this thing called a check. We could go there, too, and maybe introduce that.
I was so angry. I was like, this is the equivalent of saying, how do you solve car accidents in 2019 is you get the guy with the red flag to walk in front of the car again. I mean, it's just ridiculous. But that was them because it's the cycling is a big problem that you get. Money disappears into one account and then into 3 others, and it's gone. And the victims.
Well, fraud is always a hot topic. Another great hot topic. You like how I do these segues? I do too. I think I'm incredible.
That's why I come to work, Sam.
I love myself so much. Another segue: data privacy. Right? Oh my God! Coming from the UK, did everybody sign their GDPR form before we started?
Yes.
Oh, good.
Yeah.
All right. Story came out of Yahoo Finance. A few companies are prepared for California's consumer privacy regulations. I love the U.S. and our 50 states and our regulations. A new survey suggests that 88% of companies have not reached an adequate state of compliance ahead of the California Consumer Privacy Act. The act comes into force in January. It aims to protect citizens' privacy and has been compared to Europe's GDPR regulation. Under the new rules, California will also be able to penalize companies affected by data breaches. Only 12% of respondents said they're ready for the new regulatory landscape, according to the study by privacy technology firm Ethica. What a cool name. I get carried away with names. All right, let's start first with, all right, Will, you're the Brit in the room. GDPR, for the American audience, can you quickly explain what GDPR is?
Oh, thanks, Sam.
Come on, you can do it.
I put this into a business. It's your right to your data. It's your right to access your data, right to be forgotten, are kind of the two main ones. There was something else as well. I can't remember. Anyway, we put it into the business. Just to be clear on that 88% thing, no one was ready when GDPR came in. Because the truth is, it's like, are you ready to do this? It's like, how much scenario planning are you going to do? Truthfully, you're going to wait till the first request comes. And I think is right to be forgotten included. I can't remember on this Californian law, but
The deletion of all the data.
yeah.
Yes.
Yeah,
I
yes.
think that's what I read, yes.
And the truth is, you figure it out. It's like, what happens when the first request comes? What happens when the first criminal realizes they can annoy you by asking for all their data? That was, the truth is, this 88% thing, I don't think anyone should beat themselves up on. I'm sure whoever wrote this report is getting some good consulting fees. And I don't mean to be rude, but like this was our experience with GDPR appearing in the UK. Exactly, like literally word for word reports. Oh, it's going to be disastrous. Your company's going to collapse. You're not going to have the systems in place. You haven't practiced for it. No one's ready. Everyone did fine. You know, no one's been taken to the cleaners there. You learn you figure it out. I mean, you know where the data is.
Well, according to the article, there's 6 intentions around this act, and again, this is California specific, but California is still the 8th largest, I think, economy.
In the
it's
world
ridiculous in the world.
Yeah.
Somebody said it's a lot.
Yeah.
Most of the tech companies are there.
Yeah, a couple of them. Hey, Plaid. All right, so there's 6 though. First is know what personal data is being collected about the individual, the consumer. Know whether their personal data is sold or disclosed and to whom. Hey, Google. Say no to the sale of personal data. Access their personal data. Request a business to delete any personal information about a consumer collected from that individual and not to be discriminated against for exercising their privacy rights. This really, I think stuff like this gets interesting, and I'm going to look up at Charley. So it is interesting, right? When we were talking about Plaid. For the 2 people that listen to this podcast that don't know what Plaid does, what is Plaid business model? What is it that Plaid provides?
Yeah, so we provide a platform that enables applications to be able to connect into your bank account and be able to pull that data from that bank account. So it's all with consumer consent is really, really key, but you can pull down transaction information, payment information, identity information, anything that's in that bank account, developers can build on top of.
So again, back in my day, way back when, we talked about aggregation, and all that. If anything, now it's such a convoluted. It just is, right? I mean, I think about myself. I have, I don't know, probably double-digit banking relationships, across probably easily double-digit across that when it comes to everything from my mortgage to student loans to my investments and everything else. I can only imagine how much data I have that's flying around, that's out there. And then, good God, you get then to Amazon, and I probably have a card on file at Pinterest. I don't know. We were talking about that before. I don't think I can do that, but God only knows. Right? They probably figured it out at the bank of Pinterest for that. Yeah, I think this is interesting. I think it was just GDPR they were ready for. When PSD2 rolled out, I think, what was it, maybe 8 of the top 10 banks didn't meet the January deadline, even for implementation for that. I don't think this is uncommon.
Yep.
For fintech, though, I think it's kind of interesting because I think it's much more scary for legacy digital business and e-commerce than probably fintech, because we live in a world that is so compliant heavy, that has so many requirements around disclaimers and consents, right? That, it's not like this is overly burdensome compared to, let's say, FCRA, right, or TCPA. Like, we live in the world of these regulations, whereas e-commerce and ad tech, this is horrifying to them. For us, it's like, one more set of regulatory rules to comply with.
Do you know, that's a really good point. When GDPR happened in the UK, the banks took it really seriously, and the fintechs took it really seriously, and everyone knew where the carve-outs are and the logic of it. And then it was the first time a lot of friends who usually think I'm quite boring for knowing about financial technology would ring me up from advertising companies, and they'd be like, we're trying to figure out GDPR. And I'm like, it's not that hard. Like, you must know where the data is.
Advertising's in real trouble. E-commerce probably is in real trouble.
Yeah, I think it's because it's like the cost basis is built in, right? We have compliance teams, we have regulatory councils, we have policy teams, that we're equipped.
Right.
It's just additional something else to react against, but it's something we do build for.
I'm already licensed and regulated by 50 states and the federal government across 4 different financial service products. Like the GDPR, or whatever they're calling it in California, isn't overly burdensome compared to that.
Yeah, and I remember that feeling. Like, we kept on getting comments from our e-money license. Are you ready for GDPR? And we're like,
I mean, that's...
It's literally like, it was like, we sort of know where it is, and we'll wait for the first request, and then we'll provide it. And it was, and I'm sure I've completely forgotten. Our marketing team, interestingly, were terrified because they had a marketing list.
Right.
Which
advertising.
We hadn't even, which we hadn't even been thinking about. And they were very nervous because of the rules.
Yep.
The actual, finance side of the business, we were like, no.
Hey, Ramona, I'm curious because you're the attorney in the room. As I threw that out there, if you didn't know, Ramona's attorney, and she's still one of my favorite people in New York.
Hence,
She's
I'm not practicing anymore.
Yeah, I mean, what's your
Best
take?
kind of lawyer.
Yeah, that's it.
I mean, I'm actually, I think I'm a big proponent of like sort of, people being able to have their access to their data. So I actually think the protections are a good move. I agree. I think that there's going to be a ton of companies that are going to pop up that tech companies can use to cover their butts on this, to be honest. Yeah. And I do think that because we're in finance, we're used to being regulated across the board. Right. I mean, I think that's just a natural, and as you should, if you're dealing with people's money and personal data around money.
I mean, we deal with money and consumer data, and we knew we were going to do that when we started the company. And before we built anything else, we built a PII protection service and a security system just to enable us to secure and audit and track consumer data. That was the first code we built. And I don't think you can be a responsible fintech without having that sort of like compliance, security first, and regulation, aware attitude. Advertising has been the wild, wild west for the last 20 years, right? And so they're completely in trouble.
And I didn't give you a chance, Phil, to give it a shout out. So even financial.
Sure. I mean, we're a platform for financial services partnership. You can think of us like the Twilio for financial services in a way. We have an open API. You can integrate it anywhere in order to deliver financial service products to your consumers. You can do that to monetize them. You can do that to add value. You can do it to facilitate sales. On the other side, we integrate with all the banks and all the financial service companies to drive them the users that they would like to engage with, and do it in a way that is always profitable and ROI driven.
So I think we're all in agreement that if you're in advertising, you're screwed. And we're all happy that we're not. Our next story, this was actually an article in TechCrunch that Elavon is going to acquire Sage Pay Gateway. So the U.S. Bank Corp subsidiary will apparently purchase the payment processor for £232 million in cash, which is about $233 million. Thank you, Brexit. Elavon operates in 10 countries, says it's the fourth largest merchant acquirer in Europe. Its competitors include Stripe, PayPal, MasterCard, and Visa. Meanwhile, SagePay is one of the biggest payment processors for SMEs in the UK and Ireland. The deal is subject to regulatory approval, of course, but it's expected to close in the second quarter of 2020. Gets back to our opening story about all these acquisitions that are flying around and taking place. So this is interesting because this is a U.S. company buying a U.K. payments provider. Is there any significance in that? I look at the Brit and they're like,
I don't know, like,
you gotta quit grunting.
Yeah, I know. It's that sake coming back through. From
it's the sake. And Will, what do you think? I drank too much sake last night. That's what I think.
Do you know what? Maybe this is me being really skewed on this. Aren't they all trying to defend against Stripe? And they aim at like trying to. I know Stripe's not just a payment processor, but like they're always trying to sort of figure out, like, they can see Stripe coming into more and more areas, and they're like, oh, it's got to be a cost play. So if we just have more capacity and more scope, and we'll do better. And the truth is, if you use Stripe, you actually pay a premium because it's really user-friendly as a customer. So that's, I mean, I don't know whether I'm completely off course here, but that feels like always what the defense is here. I don't know enough, but that feels what they're doing. As
an ex-TSYS guy from way back when, right? The thing with processing, it's becoming such a commodity, right? The costs are just, and when I worked at TSYS, that was the terror, right? Is that this... it gets back to business models. This is what we talked about with Chime. It's what we talked about at each of these, right? Yeah. If your business models aren't evolving along with technology and consumer behavior, you're screwed, right? Because we're seeing margins just shrunk everywhere.
I think the trend, at least that I think that we're kind of seeing across payments, is you're seeing kind of acquisition of payment gateways and payment method out, right? So you have Rapid, you have Stripe expanding. I think this acquisition of SagePay kind of does something similar, right? You had Earthport getting bought by PayPal last year, I think, right? Where it's great. Okay, if processing is getting commoditized, what's something that doesn't get commoditized? Distribution. And we can charge a premium depending upon the payment methods that we can offer to XYZ merchant as more merchants get online, as they get more international, et cetera. As to how long that'll last, I don't know. But it does seem as though we're starting to see some consolidation in that space. Yeah. But some international expansion, which is interesting.
Yeah, it's to me, it's an incredibly interesting space, and at the end of the day, you got to have a hell of a lot of capital and a hell of a lot of resources, and in terms of people that work with you, to really look and figure out, okay, our business model's screwed. There's a lot of players coming in. Competition globally keeps shifting. Yeah. So how are you going to keep pace? And obviously, 2019 was a year of acquisitions. 2020. I mean. Yeah, I'm going to go down a rabbit trail. Do you think we're going to keep seeing this in 2020? Is this maybe trying to get ahead of any kind of market turn? Is that why we're seeing all this?
Market turn, and also I think like consolidating on business models that work, right? So much money went in to all these fintechs, right? And now it needs to start figuring out, okay, how are we going to get it out? And we have to put, consolidate that on the bets that might win. I think that's why you're seeing less seed money, right? So, it's going to keep moving in that direction.
Right. Especially since you had
Isn't that a good thing?
It depends on who you are.
Yeah, Ramona's like, wait, what?
Yeah, no, well, no, just saying, actually as someone who really cares about the capital markets in terms of all these IPOs that got dumped onto sort of the normal investor, right? That were paying out sort of these huge valuations. That at the end of the day, these aren't great companies. I mean, they weren't revenue positive companies. So I think there's some of that's happening.
Yeah.
And I agree with you that it's the revenue model at the end of the day, the business model has to be sound. And I think people are just like, where is there some value?
Yeah, where's the value? Let's consolidate it there.
Yeah.
Because Ramona, with your company, right? Now, you like how I've given everybody a chance to give the spiel. Nice. Can you give the quick pitch?
Sure. We have a platform that provides digital financial advice and education, particularly for millennials.
And this is what I know about Ramona. This is why I love her. You hustle nonstop, which in the growth stage of where you're at, you have to, right? It's constantly about how do I draw actual consumers to the product and how do I raise money?
Well, we have to actually be even more lean and I think more revenue sort of focused because as a woman of color in fintech, less than 1% goes to women of color in Silicon Valley. So we've actually always had to be thinking about how do we actually have money in the door. So I think it makes us a stronger company, but as the seed rounds are sort of dwindling, that really impacts more of the small innovators like myself in terms of how to enter the market.
Are we going to see, what's the word I want, a negative response or expect? WeWork today announced, 2,400 layoffs, I believe, is the news I just saw, right? There's obviously a great amount of distaste upon somebody maybe a couple people, being able to make a hell of a lot of money and at the same time watch a lot of other people basically lose everything that was invested in that. And that's why I think I said, Phil, when you had mentioned that I'm okay with that, with the idea of, you got to show me a quicker path to revenue, and being revenue positive and how you're going to grow. I think that for me is a maturity. I wouldn't call it a bubble. I'm not I don't know about that. I think there's multiple factors. I do think there's this concept of what if we do take a downturn? We've got an entire decade without a recession after getting all of our asses kicked in one of the worst recessions we've seen in God knows how many years, since the 30s. So I do think that has to be present in people's mind. Yeah. And if I'm pushing the money out there, I'm going to be a hell of a lot stricter on what I'm going to invest in.
There's still going to be large amounts invested, though. It's not like we're going to see... Oh, my God.
Yeah, we're seeing ridiculous amounts.
It's not going to be a peak year again, maybe, for seed, but it's still going to be tons on the table.
Yeah, it's relative, right?
It's very relative.
Although these things are changing. People are raising $1 million in a pre-seed now. Like, that's the new norm. So it's so weird. Like, so now, like, everyone's talking about pre-seed now.
Yeah.
I spent too much time on Twitter. But that was a great post. I can't remember who did it. That went back and said, if you take a look at some of the companies like around 2008, 2009, 2010, what their seed capital was,
like
and
Amazon
now what it is.
Or something, right? Raised like only $20 million or something super small in terms of all the venture capital raised.
Yeah, now that would be like a dog walking company.
Because all piles up. As soon as one makes a bet, then everybody else is like, oh, this must be good, and everything piles into it, right? And then you're fighting the money off as soon as you get the first term sheet. Right. I mean, that's still how it is.
The FOMO thing. And that's a problem. I mean, it's super problematic for founders like myself because if you don't get that sort of
you have to get one.
You have to get that lead, the signal in the market.
Yeah. So our next story actually ties right in with that about a struggling small fintech and financial who's trying to make a dent. So Alipay aims to serve 10 million European SMEs by 2024. It's an article on FinExtra. I love that we're talking about Alipay and financial in Europe. The Ant Financial platform will expand its partnerships with Worldline to allow European merchants to accept payments at point of sale. Alipay will also offer many programs to capture tourists en route at airports around the world. The company currently works with over 120 financial institutions in Europe and plans to focus on travel agencies to seize growth opportunities. The first thing that springs to mind for me is pray to God that China doesn't take a hit right within their market. That makes a lot of this stuff interesting to see what happens there.
That makes so much sense.
I'm not close enough to say whether it's a massive bubble there or not. But to me, that sounds somewhat worrisome. But I do like their expansion into the European market. For them, I think it's a great move.
I mean, if you just see the change in Europe, traveling there over the last 15 years, it's so many people coming to Europe for travel from Asia.
Yep.
Yes.
Right. And now just to let them keep paying the way they are used to it. That's just so smart.
Yeah, it's just not Europe, right? I mean, I'm Dubai. You get out and you go to the beach, right? And where it used to be, German, Italians, and everyone else, very heavy with Chinese tourists that are coming through. The middle class had exploded in China, and seeing that money come across. I mean, hell, you go to Vegas. I haven't noticed in New York in the cabs where it's saying we take Union Pay and all that. In Vegas, everything starts with Chinese and then moves into English and then Spanish, but it starts at Chinese. So you follow the money.
Right.
Yeah.
It's interesting here with their rapid expansion they're seeing. I like that they're targeting the SME side of this, though. I like that. To me, again, I think that's a smart play for them because it's something that they know.
Yeah, and it's where a lot of the tourist market is, right? Like, I mean, if I'm in, I run a shop near Windsor Castle or, near Times Square, like, I want a Chinese. It doesn't matter where you are in the world. If they're going to come and shop there, you want the ability for them to shop easily. I mean, it's.
Well, I like the idea of market dominance too. So in this article, it said that 87% of survey respondents aged 18 to 69, and that's basically everybody in China, reported they use Alipay for their financial needs. The company serves 1.2 billion users through e-wallet partnerships across the Asia-Pacific region. I love that Charley did a slight shake of his head like, that's a nice...
Crazy scale.
Isn't it nuts?
Yeah.
It is a crazy scale. And I traditionally, when I'm on stage and I'm talking about business models, I always say, look, if you think you're going to lift something from one geo to another, you need to be slightly careful. In this case, I don't know if I would say that.
Just go for it.
Yeah, in this case, especially
just go for it.
With the funds that they have and everything else. Go for it. Is it right to say that Jack Ma has retired and is teaching now? Does anybody know?
No idea.
I know he stepped down, but I'm not sure. I guess he's probably on the board, but I know he stepped down from
I guarantee
Alibaba,
you he's on the board. But I think, he said he was going to go back to teaching.
Yeah, that's funny.
I guess when you have that kind of funds, you either go back to teaching or you become Jeff Bezos and you look super pumped. Good for him.
He has a new girlfriend.
Hey, life's doesn't suck for Bezos. He's all right. Next story from CBI Insights. Global fintech funding hits quarterly record. I find this story to be completely boring, so I don't want to talk about it. But I do love CBI Insights. So actually, I think I'll blow right by that one. I want to move into our last story because this one absolutely cracks me up. One, just because of the pun that our team was able to put around this. Barclays, so they bank Barclays, and they put Bark-Lays, invite stressed students to puppy sessions. It sounds like the greatest kind of hiring stupid move I've ever seen. But anyways, next week, a Barclays branch in Manchester, England will host a litter of puppies to help cash-strapped students reduce anxiety. The bank will also provide access to money mentors who will offer advice on budgeting. More than 3/4 of students worry about running out of money in their first term, according to a study from the bank. The bank will also stream the puppy session on YouTube. Oh, my God. You know what? But actually, here's why I find this story interesting. All right? It does sound personally rather stupid, but good on them. But in the U.S., the student debt crisis, and we do say it's a student debt crisis, is a bit ridiculous. I think student debt is $1.7 trillion, I believe, and growing every year.
Yes.
Yeah, and it's actually a significant component of folks in their 50s like me and older, whether you're carrying your kids' debt or it might even be yours because you went back to school.
Yep.
So I thought we were unique in the U.S. I didn't realize the amount of student debt that's carried in the U.K.
Yeah, I think you walk away with about £30,000 now. So it's obviously lower than here, but it's still significant.
Yeah, I was actually surprised.
But it's held in a weird way because it's given to you by the government and then it's pulled back out of your salary. But it lasts some people a lifetime.
That's interesting.
But there's also a crisis that's happening here right now, which is the stress that students are dropping out because they don't have money. So there's a student debt, which is post, and then there's also the stress of not having enough money to during school. And I think that's sort of what the Barclays thing is trying to address, which is the experiential. See, this is the thing. Money is personal, and this is sort of like my sweet spot. Money is personal.
Ramona,
At the end of the day, what people are trying to do is to connect money to something that is is interesting. It's a brand. I mean, we always said we're trying to create a brand around a lifestyle brand around money. And I think this is what this is getting at, right? Which is, yes, I have 10 apps and they all do great things, but at the end of the day, money is still personal. It's like Weight Watchers. It's like, it's something that they want to experience. And I think that this is what they're getting at here, which is like, it's human and you can talk about money and feel good and go pet puppies. Hey, I follow tons of dogs on Instagram. So they would kind of get me to go to something like this.
So does Phil.
Can I get a little bit grumpy about this because it's like, it's what you often see when it feels, I mean, maybe this is very unfair, but it's like, oh, we're going to give you dogs and we're going to make it silly.
But we're not going to forgive your debt.
We're not going to forgive your debt.
There's no ROI on it. That's the other thing. I was like, what's your ROI?
Well, no, this entirely comes down to the fact that they're all renting out their fundamental core banking to third parties, right? And financial service products themselves are entirely undifferentiated, right? And once everything has banking functionality, what does the bank actually do?
Correct.
Right? So they have to have a brand and they have to have some connection.
The problem is this is so inauthentic.
They're flailing, but they're all looking for something, right, to actually, differentiate what they actually are.
Totally.
You're right. The inauthentic and bluntly quite condescending.
Yeah.
Like, I don't know, like I'm 37, but if I was a student right now, there's no way I'm going into Barclays because it feels condescending. I think the much more interesting trend that people aren't focusing enough on is on like Reddit and in certain like groups. People are now, there's a lot of peer advice happening in this generation.
Yep.
And I think that is absolutely fascinating. I mean, it's open to exploitation, the wrong tips on advice on investments. But if you look at some of the stuff that's out there on Reddit threads, it's fascinating. These guys are going out and they don't necessarily trust the generation above them. With probably some justification, just to be clear, because they are living a completely different experience. This is the first generation that's come through with their brand loyalty is 9 inches from their face on a smartphone. They've had like a different experience through their teenage years than anyone who didn't have this. So they are much more inclined to trust their peers, like maybe even more so than any generation before. And this. It's like people sitting in a room in their 40s.
This is a cynical attempt to get Instagram posts.
Right.
Like, because what is it? You get to take a
now.
picture with a dog and it's going to be tagged with Barclays, right? Because it's a clever pun. I mean, that's all it is. It's the Starbucks unicorn latte.
I feel terrible, by the way, having Go Barclays because they've been absolutely lovely to us this week.
Oh, yeah, they're a great
in
client.
Barclays Rise. They've looked after us.
We love y'all, but
they've
we're
done
also
incredibly. But this particular initiative annoys me.
It's Barclays UK, not Barclays
No,
US.
I think that kind of what Will and Ramona was saying, where like it comes down to that personal connection, right? I think like the best advice you have is from someone that you actually trust. They may not necessarily be the finance guru. Like I was going to say, I think one of the most active Slack channels that we have at Plaid is our personal finance channel, and it's just people sharing random advice where it's like, hey, I need a tax person, or hey, I'm thinking about getting a CD. What does that mean, right? And we're just sharing different things across that. And like we work in a fintech company, right? And yet we have all these fintech apps and we're still asking each other for all this advice.
They're asking about, because people don't get financial education at home or at school. And then that's actually the white space that we're filling. It's like, yes, you can have great apps. We'll bring them onto our platform and integrate them through an API. But at the end of the day, people want information and they want information they can trust. So we're authentic. This is inauthentic. That's the problem. Right?
And there's a distinct gap here. We touched on this earlier in some of the other stories that I find fascinating. This is a generation that has not gone through a massive recession. Right? We've gone a decade without a recession, and yet, right, we've got the 1.7 trillion in student debt. The kind of domino effect, because I keep reading about this, is what will be the impact on, say, the auto industry or mortgages. Right? They're constantly getting pushed.
Then I don't know if the fact I don't think it's accurate to say they haven't experienced what it's like to be in a recession, because we almost have two economies going on right now.
I love you,
where
Phil.
QE2 has been propping up asset classes at the expense of consumers and younger generations, right? So it's not like they're in a robust job market if they're outside of New York City or San Francisco. They're not seeing their own savings go up. Their costs are going up. Like the actual inflation they experience might not be tracked in the CPI, but they're feeling it. So I don't know if it's right to say they haven't experienced a recession.
I
totally
thank
agree.
you for coming there, right? Because I agree with you 100%, right? You can point to the stock market and say, look at the incredible rise that we're seeing in there. And I'm like, and who's actually benefiting
Wages
from
are
it?
not
It's owned by
going
10% of America.
Thank you.
And where do you answer the question in here? Like, where's the Barclays branch with the dogs that's going to answer the question, I'm at university, should you become a lawyer? Probably not. Like, I don't know if lawyers are going to exist in the future. And sorry, Ramona, I'm not being rude.
No
It's a
longer
very
a
expensive
lawyer.
thing.
I'm a trained accountant, and like they are not going to exist in the future. So those traditional routes that you were going to come out. So a little bit of budgeting tips with a dog. I mean, is just not going to answer your fundamental questions
right.
that you
Yeah.
as a generation have got.
That's right.
Sorry you made the poor choice of taking on all this debt. Come pet a dog. Right. It's like,
and post
Really makes me
and
cross.
hashtag and
Yeah.
make sure you do that
Yeah.
also.
Right.
Yeah. I read this and I'm like, come on, really? It gets back to, and this is what I get back to, and this is across any type of company that you want to start. Are you addressing a real problem? Are you really addressing a real problem that will impact either an individual's life or a business life to make it easier and to keep pace with how technology is changing, right? And how business models are changing and how they're moving. Which, don't you love that? Because I'm going to use this for a shout out for each of you to give us a little spiel on your company because we're out of time. Because that wraps up this week's news show. I want to thank all of our guests. So where can people find out more about you and, more importantly, the company? Phil.
Evenfinancial.com. And if you're looking to do partnership in financial services to make more money or serve your consumers better, just get in touch and integrate us.
And they're actually right across the street from our New York office. So Alex Gillette, he had the idea of putting up a zip line between the two of us.
Yep.
I'm incredibly excited about that. Ramona?
They can find us at www.mymoneymyfuture.co. You can also find us on Instagram. And we are always looking to partner with other startups, actually. We're not a competitor, so we provide that sort of space of financial education and meeting a new customer, which is the multicultural demographic in the U.S., which is huge growth market. So
If you see Ramona on stage, stay and listen. She's incredibly good storyteller and incredibly passionate about the industry and what she's in. Charley.
We're at plaid.com. And quick little plug, we just launched in France, Spain, and Ireland today.
Yeah, I saw that.
So we're expanding out in the UK, EU, Canada, and the US. So sign up for API keys, plaid.com.
If you would have acquired somebody, then you would have been story number one.
You're
But
right,
the
right.
next time you're on, there you
We'll
go.
work on that.
Will?
I'm on Twitter at Will White 11FS.
And again, one of the greatest beards in all of New York. As for me, it's Sam Maule on Twitter. Obviously, follow the Fintech Insider feed also if you want to be able to see what city we're at and what we're up to. All right, folks, what did you think about today's show? Let us know on Twitter at Fintech Insiders or email podcasts@11fs.com. Don't forget to vote for us for the British Banking Awards. We really appreciate that. And most importantly for us, go out to iTunes, give us a 5-star review. If you don't want to give us a 5-star review, go out to like Freakonomics and give them like a 1-star. That would actually be cool. Everybody, thanks for listening. Everybody, thanks for being here.
thank
you very much.